Steve, I mean, we've got, what, 109 points being added to the Hang Seng by Tencent, 40 by Alibaba. Hugh, on an absolute tear. What's the latest?
Well, it removes a lot of uncertainty that has really dogged these stocks, in particular Alibaba. It's because, of course, of all the uncertainty over the anti-monopoly issues and the whereabouts of Jack Ma over recent weeks. So this removes a lot of that uncertainty that was coming from the United States. Now, sources are telling us, who are very familiar with this matter, that the Trump administration is not going to be adding the so-called BAT companies, Baidu, Alibaba, and Tencent, to this investment blacklist, which would have forbid Americans from investing in these companies in the U.S. or elsewhere, or holding these shares. What this one source is telling Bloomberg News is that Treasury the Treasury Department refused to go along at the urging of the Pentagon, which had its own report and list that it was pushing. The Pentagon was pushing to block all companies that were deemed to have ties to the Chinese military. Well, Treasury, according to the source, did not go along with that. And so we're hearing these three companies are not going to be added. Now, it obviously removes a lot of uncertainty and difficulty of the prospect of unwinding all these positions that Americans have, of course, in Alibaba and these other companies, because Alibaba and Tencent alone have market values through their primary listings as well here in Hong Kong well in excess of $1 trillion US. And those two companies alone make up about 10% of the MSCI Emerging Market Benchmark Index. So it would have been troublesome without a doubt. Now, I want to go on to say, though, there are many developments on this investment ban, so to speak, that they need to unpack. The Trump administration also today, Trump himself, signing an amendment to that November investment order that bans Americans from investing in certain Chinese securities. This will now require, for those companies that are on the list, complete divestment. Before, the original order was prohibiting Americans from buying. Now you cannot, as of November 11th of this year, so a year from the initial signing of the order, will not be able to possess these stocks or sell them in addition to buying. So that's in addition to that. Also, again, I'm unpacking a lot of developments this morning. We're hearing as well, caught in the delisting quagmire is CNOOC, the offshore drilling giant of China, state-owned company. S&P Dow Jones Indices says the oil giant will be ineligible for its indices and removed prior to February 1st. The stock, though, is higher on the day. And finally, Hong Kong's Tracker Fund is the largest ETF here in Hong Kong. It's run by State Street. It is doing an about face. Similar to what the New York Stock Exchange did. 2 days ago, it came out and said it was not going to buy stocks that were listed under the Trump ban. Now, 2 days later, it's coming back and saying we're reversing that decision. And in fact, this morning, the manager of that fund, the Tracker Fund, State Street, in a separate statement today says the ban doesn't apply because the Tracker Fund and its advisor, State Street Global Advisors Asia, are considered to be non-U.S. persons. So while reversing its decision, the firm did reiterate, though, that this Hong Kong Tracker Fund is not suitable or appropriate for American investors. Lots to unpack.